Assalamualaikum and good morning. I bid to Miss Sarah and my fellow friends. Today, our group number 5 will present Chapter 9 Fundamental of Accounting System. I'm Amna Atira and I shall begin with the introduction and accounting operations. So, what are the objectives of financial accounting system? Produces relevant financial information about past and present transaction of government, serves as basis for decision making for future operation, serves as the control mechanism for the receipts, dispositions, and utilizations of government funds and properties, prepares financial report pertaining to the results of operations of various government agencies that are for dissemination to the public, creates the public accountability. So this question had came out in the past year, December 2019. You guys can take note on this. And then future of financial accounting system. Accounting system is maintained according to government rules and regulation and comply with the federal constitution, statutory and other legal requirements. All the expenses are classified into budget classification, facilitates budgetary control, maintained in a manner that will clearly identify the objects and purposes for which funds have been received and expended, facilitate audit by external review authorities, and readily furnish the information needed for effective audit, permit effective administrative control of funds and operations, program management, and internal audit and appraisal. So what is vote accounting and what is vote book? Vote accounting is one of the public accounting system. It is concerned with the receipt, custody, disbursement, and transfer of public and trust monies are required by law. Relevant mechanism to ensure effective recording of public sector activities. Vote book means records allocation of funds received, actual amount of spending, committed liabilities, and funds balance. Financial record that must be kept by the government agency in accordance with Treasury Instruction TI 95. Next, we proceed with accounting operation. Focus on how to disclose public monies and public stores that have been used for public development and activities. Detailed guidelines provided by TI, Treasury Instruction, and TC, Treasury Circular. Adapt the principle and assumption of double entry system of bookkeeping, such as cash book, journal, ledger, and subsidiary records. You guys can refer this on page 185, figure 9.2. Double effects for every transaction must be recorded. All books of account must be balanced monthly and balanced in the subsidiary ledger agreed with the respective control account. TI 143. Proceed to chart of accounts. Coded listing of the accounts contained in the general ledger of a particular public sector organization. Represents a financial data structure of organizations. Provides detailed data elements from which information can be assembled and presented in financial statements. Coding system is to improve transaction process. TC number 5/2004. Code of receipt and expenditures in 5-digit numbers for various objects. 4 levels of coding. SO, standard object. DO, detail object. EGO, extension group object. EO, extension object. You guys can refer this for further information on page 187 till 189, figure 9.1 and 9.2. Next, TI 41 states costs of expenditure should only be credited upon permission given by Treasury or State Financial Authority. The purpose of classification include, so this question had came out in past year Jan 2018, so you guys can also highlight on this. So the purpose of classifications are to simplify the process of recording and preparations of periodical reporting, to enable detailed information to be gathered to the purpose of revenue and expenditure analysis, to fulfill the needs of the accounting system implemented by the Accountant General Office, to fulfill the needs of the Department of Statistics in the preparations of the complete national account. That's all from me. Thank you.
Next, accounting for receipt. A receipt encompasses any income received or earned by the government. Detailed procedure for revenue collection. Treasury circular and Treasury circular letters circulate from time to time which aim to provide information on amendments, approved, estimated and detailed guidelines on certain procedure. Government organisations that collect revenue are required to the respective procedures stated in the Treasury instruction. The collection are under responsibility of the controlling officer of public sector organisation, particularly accounting for cash receipt. Controlling officer responsibility under Treasury Instruction 53 are to make a proper collection to all public monies received and receivable, to safe custody the money collected, and lastly to record in the account rendered. Next slide is accounting for cash receipt. Revenue received from the public may include cash, stamp, check, legal tender, and foreign currency. This chapter, therefore, provides detailed discussion about the procedure to deal with cash receipt. The flowchart process for the accounting for cash receipt is illustrated in figure 9.3 on the page 190. The first procedure accounting for cash receipt after receive money from public is assurance of receipt. Treasury Instruction 60, an official receipt must be issued to the payer to acknowledge that money has been received. Treasury Instruction 61, the collector also responsible to notify the payer about their rights to demand for a receipt. Treasury Instruction 3, collector is an officer who is responsible for the collection of public money. Segregation of duty has been emphasized in the process of preparing a receipt. As prescribed by the Treasury Instruction 70, any receipt must be prepared by an officer and signed by another officer who also received the money. The next slide is exception to Treasury Instruction 70. The first one, a computer printout, is also considered as a receipt but no signature is required. The second one, an approved mechanized scheme for issue of receipt is in operation. The third one, a fixed fee is printed on the receipt license or ticket. The fourth, an officer is given the authority to make offsite collection where temporary counters are set up. And lastly, no second officer is available and specific sanction has been obtained from the Accountant General. But under Treasury Instruction 91, an official receipt can also be printed out directly from the system as approved by the Accountant General. Under Treasury Instruction 62, if the receipt is spoiled, it must not be altered or destroyed but must be cancelled and attached together with carbon copies because for the audit purposes. And under Treasury Instruction 63, when receipt of acknowledgement are issued from counterfoil book, a carbon copy must be prepared and signed by the responsible officer, and it should contain the detail of the collection date and the amount received. The second procedure is custody on unused receipt. The safeguarding of unused receipt is a very crucial in an organization. As stated in Treasury Instruction 65, collectors of public monies are responsible for the safekeeping and the proper use of all receipt, license book and unused receipt book. And under Treasury Instruction 60CA, the collectors are expected to ensure all unused receipt book and license book are securely locked up either under his own control or by a senior officer who is not involved in making collection and issue receipt. And under Treasury Instruction 66C and 68, book of receipt should be issued in a numerical sequence and that they are securely locked up. And under Treasury Instruction 66B, any defective book should be returned to the government printers. The third procedure is recording of collection. Following Treasury Instruction 72, all receipts must be recorded individually into cash book at the time the transaction occurs or before the end of the day, while the cashier records all register and list of the collection. Another officer must transfer the recording into the cash book unless no second officer is available and specific sanction has been obtained from the Accountant General. And under Treasury Instruction 74, in the case of any differences between the amount collected and the amount due, the officer in charge must inform the collector. And under Treasury Instruction 75, any surplus found in balancing the books with the actual cash receipt must be credited to the government revenue under miscellaneous receipt. The last procedure is lodgement of collection. All money received that have reached the approved amount must be lodged into the bank in accordance with the specific revenue code. Treasury Instruction 78A indicate that the maximum approved amount to be lodged into the bank is when the cash is more than 500 ringgit or the total collection is more than 2,000 ringgit. The Treasury Instruction 78P state that any smaller amount collected that has met the last working day of the month must also be lodged into the bank. Treasury Instruction 79A, a bank in slip must be prepared when collection are lodged into the bank, and Treasury Instruction 79C has to be forwarded to the appropriate treasury at the end of each month or shorter interval as prescribed by the Accountant General. As you can see in the next slide, under Treasury Instruction 79B, total lodgement for the day will be recorded in the cash book on the date of lodgement. And under Treasury Instruction 79D, every amount paid or paid in slip forward to the Treasury must be accompanied by collector's statement and acknowledged by an official receipt. However, in most circumstances, bank slip is forwarded to accounting office. Under Treasury Instruction 79F, state that in the case of no collection made in any specific accounting period, a nil statement shall then be submitted. And lastly, under Treasury Instruction 85, no public monies can be used either as an advance or as a loan between the time of receipt and the time of lodgement into the bank. Under accounting for receipt, other than accounting for cash receipt, it also has accounting for other form of receipt. This discuss about the procedure to account and deal with other form of receipt other than cash receipt. Other form of receipt include revenue by way of stamp, mail, check, and legal tender. The Treasury Instruction under the accounting for other forms of receipt is Treasury Instruction 64, which is the revenue collected in stamp. Treasury Instruction 71, revenue received by mail. Treasury Instruction 76, revenue received in the form of check. And Treasury Instruction 77, revenue in the form of legal tender. There are also other issues in relation with the receipt discussed in the Treasury Instruction. Treasury Instruction 80, collectors' failure to account for their collection. Treasury Instruction 81, receipt by officers who are not collectors of revenue. Treasury Instruction 87 and 88, refund of revenue. Treasury Instruction 89, Return of Arrears of Revenue, and lastly, Treasury Instruction 90, Failure of Accounting Officer for some receivable to be reported.
Accounting for payment. TIs, which is the Treasury Instruction 92 to 110, govern the payment system of government agencies, which include how and when to record payment, as well as the monitoring and controlling of the allocated funds. Any outflow of money is considered as an expenditure or payment to the government. An expenditure or payment from a public sector perspective includes the payment for acquiring fixed asset, payment for supplies and services, and payment of emolument. The primary aims of those TIs include the following. The first one, upgrade the quality of cash management, improve central and branch government agencies, and improve government agencies' payment system. Under TI 54, a controlling officer is expected to control the expenditure provided for the head of estimates under his control. Types of payment under TC, which is the Treasury Circular number 5/2004, are emoluments, services and supplies, assets, gifts and fixed charges, and other expenditures. The procedures for payment begin when authorized officer from purchasing department prepares the local order to the supplier. Under TI 93, the condition that the respective accounting officers need to give focus upon which of a report is received from the purchasing department, which include the following. The payment will not cause an excess on the amount provided for the subhead to which it is chargeable. The authorized officer certifies that the payment charges are in order. Any repayment of advances or other liabilities have been duly deducted from the amount of payment. The flowchart of accounting for payment of purchases, it explains the procedures of accounting for payment of purchases, which are the services and supplies. You can refer to page 195 under figure 9.4. All vouchers prepared should contain detailed particulars, date of transaction, quantities, and voucher number to enable it to be verified adequately, which is under TI 99. The controlling officer may delegate his authority for vouchers to be certified, which is under TI 101. His signature or authorized representatives indicates the accuracy of every detail contained on the voucher. The authorized officer will be held responsible for the services specified which have been duly performed, and that the price charged is according to the specification of contracts, which is under TI 102. Under TI 107, a payment will be considered as unvouched expenditure if there is evidence that it has not been properly incurred, authorized, and discharged. Under TI 109, therefore, the respective authorized officer must seek approval of the Treasury for payment to be charged to the accounts. And under TI 98A, if the payment voucher is lost, the authorized officer must produce the certified carbon copy of the voucher to the officer responsible for payment. Evidence of receipt of payment must also be attached. A check is prepared after the payment voucher has been vouched and issued to the payee. When a check is drawn or received for distribution, a payment register should be maintained. Under TI 98B, the payment register should be inspected and initialed at least once a month by the head of the department or any authorized representative. Self-accounting department (SADs) are responsible to process their own payment voucher as well as for bulk payment. Payment vouchers, including bulk purchases for 9 SADs, are to be processed by the Accountant General Department. Other issues relating to the accounting for payment. The first one, payment for travelling expenses, which is under TI 100. Travelling claim should be presented not later than the 10th day of the succeeding month. The vouchers should give full details of dates, times, distances, rates, officers' designation, and basic salary. The second one is payment for salaries, which is under TI 105, which it is to be paid before the last full working day of the month for which they are due. Pension shall not be paid earlier than 4 days from the end of period to which they relate. The method of payment are cheque, cash, petty cash, and electronic fund and telegraphic transfer.
Hi, my name is Nerina and I will be explaining on the recording of payment transaction. So Treasury Instructions 94 states that the responsibility to maintain the expenditure vote and vote book shall be under the controlling officer. For example, where a controlling officer or allocation warrant holder finds it necessary to place a portion of an expenditure vote under his control at the disposal of another officer, he may either issue an allocation warrant or sub-allocation warrant to the officer concerned, or authorize the officer concerned by letter to incur expenditure against the vote up to a stated limit and to submit vouchers to him for payment. Treasury Instructions 95 further states the need to prepare a vote book. So this book is a financial record that must be kept by all government agencies, and it is useful for recording allocation of fund received, expenditure, liabilities, and changes in budget. Treasury Instructions 95 also specifies the primary duties of every controlling officer or officers in controlling the object expenditure. So these are the primary duties of every controlling officer or officers in controlling the object expenditure. First is to maintain the vote book that shows clearly at any time each subhead or fund allocated under his control. For example, all debits and credits to the subhead or fund as and when they are occurred together with the accumulated total of the net expenditure, liabilities as they are incurred, proposals for allocations, payments, and transfers should be treated as liabilities. Liabilities should be deducted when it is paid. The total outstanding liabilities should then be adjusted accordingly. Next, to certify a voucher for payment or adjustment, initial in the column provided in the vote book is required. The officer must also ensure that the related liability has been deducted or reduced. Next, to reconcile the vote book with the Treasury or head office records not less than on per quarter. The reconciliation statement should be signed and retained. And lastly, to carry forward all outstanding liabilities, including unsettled indents, at the end of the financial year. So these reasons for maintaining the vote book has come out in the past year question July 17, question 5A. So among the reasons for maintaining the vote book are to control and ensure that expenditure and liabilities do not exceed the approved allocation and to produce reports on how allocation was utilized. So, vote book is divided into 3 parts. Part 1 on the upper page of the left-hand side is used for recording vote information such as vote number, program or activity code, and the object code, as well as the total allocation for the year. Part 2 on the upper page of the right-hand corner records information on increase or decrease in allocation for the year, such as allocation received for expenditure or cancellations of allocations. And lastly, part 3, which is the remainder of the page, records detailed transactions such as the allocation received by warrant, reduction or utilizations of allocation, fireman to incur liability, to cancel liability, expenses, reconciliation, closing entries, and balancing accounts. The format of vote book is illustrated in figure 9.5 in the page 197 of the textbook. Procedure for recording the vote book. The resource allocation are categorized into operating expenditure and development expenditure. Each of these expenditure has a separate vote, which are vote B and vote T for operating expenditure and vote P for development expenditure. Vote P is for supply and vote T is for charge, whereas vote P is for development. Under each vote, the budget is divided according to programs or activity of the projects. Each program or activity is grouped according to the subhead of expenditure. For the security control budget, the vote book must maintain separate votes even though it is in the same vote book. Each program or activity or project are kept separately under each vote. And under each program or activity, the object of expenditure is to be kept separately. And each page of the vote book should be serially numbered and the number of pages should be provided for every object of expenditures. There are 12 types of transactions to be recorded in the vote book. They are allocation warrant received, additional allocation received, reduced allocation, sub-allocation warrant, transfer allocation, incur liability, cancellations of liability, record expenditure, credit expenditure, adjustment entry, closing entry, and liability brought forward. Next, procedures for the reconciliations of vote book. Reconciliation of vote book is a process to ensure the accuracy and completeness of transactions recorded in the vote book as compared to the detailed report. A detailed report provided by the Accountant General Department shows a listing of all payments and receipts of a particular agency. The transactions in the vote book are verified to ensure that such expenses are as per report. If there are any discrepancies between the report and the vote book, the officer in charge has to prepare a reconciliation report to explain the differences in the book. This reconciliation statement is prepared by the controlling officer or any officer who is authorized for the allocations of public monies. There are numerous reasons for reconciliation. Among the reasons are to detect any unauthorized payment, to detect error in posting transaction at General Accountant Department level, and to ensure the accuracy of expenses recorded in the vote book and detailed report, to control the expenses and liability within the authorized allocation, and lastly to ensure the reports from the agency's vote book regarding allocations, expenditure, and liability are reliable, accurate, and complete, thus helps in the process of decision making. The reconciliation statements must be prepared in accordance to the standard format and various supporting documents, like list of vouchers that has not been paid, list of transactions in the detailed report that is not included in the vote book, and list of transactions in the vote book that is not included in the detailed report. Reconciliations of the vote book has to be done according to the procedures as listed below. So the first procedure is to review the detailed report with the vote book. When the detailed report of the monthly expenses is received from the Accountant General Department, it must be checked and marked with the transactions recorded. If the non-obligated balance and transactions are the same in both books and report, then it ends here. But if not, it has to go through two steps. The first step is to investigate the transaction that appears in only one set of records, which means any transaction that is not marked either in the detailed report or vote book for a specific month or previous month must be investigated thoroughly to ensure that there is no unauthorized payments, transaction errors, or missing transactions. The second step is to report any unauthorized payments. If there are unauthorized payments, they must be immediately reported to the Accountant General for immediate action. The second procedure is to prepare a reconciliation statement. Transaction that is not marked in the detailed report or under the debit or credit column of the vote book for a specific month and previous months must be included in the reconciliation together with its supporting documents such as balance of budget, unpaid voucher, non-obligated liability, and many more. The other examples of these supporting documents can be found in page 222 of the textbooks. Third procedure is to record contra transaction in the vote book. So if there is no error of transaction or missing transaction in the vote book, but included in the detailed report, the vote book must be updated immediately through the contra transaction as below. The first one is correction error in vote book has to be corrected immediately. So after the correction is done, the transaction is marked for both events in the detailed report and vote book. And next is the recording transactions missing from vote book must be recorded immediately in vote book. And every reconciliation statement and supporting document must be signed by the officer responsible and to present it to the Accountant General within 2 weeks after the detailed report is received. And thanks for your attention. If you have any questions, please ask. But if you don't, I will proceed with the detailed procedure of recording transactions into vote book using the past year questions. Thank you.